two kinds of debt. There's bad debt and there's good debt. What's the difference? Well, credit cards would be a good example, an excellent example of bad debt, because you're probably buying stuff. You're buying consumables. You're on that's that income side as opposed to that wealth building side. Student loan is good debt. Student loan is, if you're doing it right and you're not on the 10-year plan with dad and mom, that the student loan is investing in an asset, education that will have an economic life of 30 or 40 years. Home equity line of credit. Most of us, we use our home equity line of credit for stupid stuff like buying vacations and paying for weddings. Good debt would be to go out and borrow money to buy a business. Home mortgage, bad debt, because you're buying an asset. Now, don't misunderstand. I'm not suggesting you shouldn't own your own home. You should. I do. I have for a long time, and I think you should. But it's important to understand that the mortgage you buy for your home is for your living expense. It's not for an investment purpose. Make sense? Okay. Whereas you go out and get a mortgage on a cash flow property, that cash flow property is going to pay the mortgage and something. How did David slay Goliath? Pretty simple answer. It was leverage, right? Little Goliath, little slingshot, boom. Big guy's down. There's different kinds of leverage. Financial. Financial leverage is, of course, a double-edged sword. If anybody's read the news in the last year or two, and the housing bubble, and the foreclosures, and short sales, and all those great things that the business news likes to get us all upset about every day. There is potential for abuse. And there was a lot of it. And that's part of why our economy is in the trouble it is right now, or it has been in. I think we're starting to come out of it. So financial leverage has to be used wisely and has to be used cautiously. There's the leverage of your mind, your thoughts, your ideas. Do you talk like a rich person or do you talk like a poor person? Do you talk about spending money or do you talk about investing money? You know, the adage again, if you think you can or you think you can't, either way you're going to be right. If you think that investing in real estate's risky, well, it's going to be risky for you. If you think it's too hard to do, well, it's going to be too hard for you to do. But I got news for you. I'm no rocket scientist. It's not hard. It's really not. And then you have to have a plan. Investing is a plan. It doesn't just happen. And then most of all, there's the leverage of your actions. You know, remember, not to decide is a decision. So you can listen to everything we say tonight. Hopefully somebody in here will get brainwashed enough and agree with everything I've said tonight. But if you don't get up from the table and go do something, whether it's with Sabre or whether it's somebody else or whether it's on your own, if you don't do anything, you're not exercising your leverage. Let's talk a little bit about the types of income. 50% money, taxes, is your JOB, job. Most of us still have those. 20% money comes from intellectual property, stocks and bonds, think capital gains. 0% money comes from real estate. Think 1031 like-kind exchange. I'll talk a little bit more in a minute about that. Now, it's important to remember when we talk about retirement, and you know, real estate is a retirement type vehicle. Real estate's not in a vehicle for you to be able to pay for your vacation next year. We all retire on 20% money and 0% money, not 50% money. What I like to call the 401k fantasy. We talks about 401k, tax-free, we've all heard all those, you know, there's thousands of ads on the TV every day. But remember, 401 money is taxed at your nominal income rate as earned income when you withdraw it. So 401k is still 50% money unless you're in such a low tax rate because you're poor. I don't intend to retire poor. I hope nobody else does here either. So the question we have tonight is, what's your plan for retirement and financial freedom? And we're going to suggest that commercial real estate is a part of that pathway. So if you want to earn more money and increase your wealth, you need to serve more people. Henry Ford became one of the richest men of America. You know, the Model T production line took the average price of a car from $2,500 down to $600, sold millions of them, paid Detroit workers twice the going rate. He became, at that point, probably the richest guy in America. He served more people, and he served more people at lower cost. And our theory here is that multi-tenant commercial property is your vehicle to serving more people. Dr. Dolph DeRoos, one of the world's great real estate experts, residential, particularly commercial expert, says that simply there's no better long-term pathway to wealth in the United States of America. Now, why is that? Well, our federal government and most of our state tax laws are designed to encourage us to invest in commercial real estate. Interest is tax deductible in the current period. That's a 30 or 40% discount on your cost of financing. Phantom cash flow is created through depreciation. That's an add back. And of course, there's potential for greater leverage in commercial real estate. You can go to your bank and borrow money. Today, okay, the loan-to-value rates are down a little bit now. You go out and buy a good cash flow property today, maybe they'll lend you 60 or 65%. 2 or 3 years ago, they might lend you 75 or 80. But they're lending far above, and for a decent property, they're lending far above 50%. So my question is, what bank's going to lend you money to go out and buy stocks or bonds or a mutual fund? Yeah, you can do margins, and how many people have jumped out of windows because of margin calls? And it's very important to understand, too, that the larger the property, the more significant the cash flow, the more the lender looks at the property to repay the loan, and the less they look at you or me or our individual credit. Now, that's not me saying that you might not get your first loan if you're a deadbeat and you just filed bankruptcy, but they look much more at the property than they do at you as an individual. It's passive income, taxed at the least rates, and of course, there are capital gains taxes, which can be deferred for many years, often forever, allowing the astute investor to reinvest with the government's money, what would have been the government's money. In our country, we know tax evasion is clearly illegal. Our friend and our old neighbor, Leona Helmsley, spent a few years up in Danbury as the guest of the feds, as one example. Tax avoidance in our country, though, is fully encouraged. Think 1031 like-kind exchange. Very simply, you sell an old property, you buy a new property. You follow a couple rules. The cost basis from the old property goes to the new property. You have 45 days from the close of your old property to nominate up to 3 properties. And you have to close on 1 or more of those 3 properties with 180 days from the original sale. So theoretically, you can move your tax basis along. I've got 1 cost basis now that's gone through 4 properties. There's other ways, too. One of the more popular ways is do a cash-out refinancing. If you buy a building with X amount of debt, and after time the building appreciates, you increase the level of debt, the cash you take out is all tax-free distribution. Right. And of course, there's some astute, we have some estate planning people. There's astute use of trust and things like that. It's entirely possible to start with 1 small property, ratchet it up 4, 5, 6, 8, 10 times over your lifetime, and that entity passes to a trust at the time of death, and the person and that person never paid a penny of capital gains, and it's all perfectly legal. Commercial real estate also gives the investor a much greater hands-on control of the asset when compared to other types of assets. You own 500 shares of Johnson & Johnson, and you got this great idea for a new product. And you sit down and you write a 2-page letter to the chairman of the board of Johnson & Johnson, and you tell him about your great idea for this new product. What do you think the odds are you're going to get an answer to that letter? You might get a thank you very much, dear sir form letter. But if you own your own real estate, there's a bunch of things you can do. Most of the good properties out there are good properties, good opportunities for us to buy because they probably weren't managed as well as they should. There are a lot of people doctors and lawyers and Indian chiefs who go out and buy commercial property. They've heard it's a great idea. They don't hire a professional. They get too busy with their primary livelihood, and they don't do the property justice. So improved management is a great opportunity to increase the value. There's always opportunities for additions, improvements, and upgrades. I just bought a new property in Gainesville, Florida. We have a neighbor that's a restaurant. The restaurant has one of these open seating policies, so people tend to mill around on the front portico of the property for 20, 30, 40 minutes while they're waiting for their tables. And they tend to leave cigarette butts and beer bottles around. So when I started meeting my new tenants, everybody's like, well, I'm like, what's your biggest concern? Well, the steakhouse next door, we come in on Saturday morning, the parking lot's a mess. So I went out and I bought 3 $350 pretty nice high-end trash containers like you'd see at Disney or someplace. They think I'm a hero for $1,000, I mean, the value of that kind of loyalty is huge when you're dealing with smaller tenants. There's always the possibilities for things like subdivisions, rezoning, and you're always looking at property for the highest and best use. Very simply, if the prudent investor knows how to manage money and property, commercial real estate is a far safer place to keep your money than any other type of investment. Commercial real estate never falls to zero, unless there's some toxic hazard thing that should have been disclosed, found out during your due diligence period, and if not, there's probably some government bailout to save your bacon anyway. Land, especially prime commercial land, is a limited resource. I mean, very simply, they aren't making any more of it.